Bear with me 1 second. We're going to link this to Facebook Live. Yep, there we go. Okay, looks like we're live here. And let's dive into this. So thanks for joining me today. I actually did this last week too, and I'm going to continue to do these meetings and market updates probably forever now. It's just to keep everybody up to speed with what's exactly going on in the real estate market here in Northeastern Ohio. So thanks for joining. My name's Ed Huck. I'm actually, for those of you that don't know me, I'm a realtor with Keller Williams Realty. I have a real estate team. Been practicing since about 1992. So I've seen some ups and downs in the real estate market and survived through all of those. Actually was with a big regional, large regional brokerage for a while, also managed an office for a while. And again, I've been building my team here at Keller Williams for about 12, 13 years. So for those of you that were on last week, I'm going to bore you for just 2 seconds. I will also put on Facebook a link back to last week's meeting or webinar that talked about really a recap of where the market was prior to the beginning of March 2020 and how that related to where we were back in 2008 before we saw the last huge real estate downturn. I'm not calling this a downturn, so don't get confused. I'm just saying I was actually analyzing the similarities and the dissimilarities of how 2008 compares to now. So you can go back and watch that. But the 30-second version of that is, you know, the real estate market is a strong seller's market prior to March of 2020. And back in 2008, before the real estate bubble blew up, it was actually either a neutral market or would be considered a buyer's market in most markets or most areas. And that helped contribute to when the real estate bubble burst and put even more homes on the market when there already was too many more homes. That was a huge challenge. A difference now in 2020, we have very little inventory. So even if we were to add a ton of more homes for sale, right now there's plenty of demand for homes to take on any new listings that we would have. So that was some of what we covered, along with what was happening with the interest rates and what was happening with the local economies, you know, as far as gross domestic natural product and all the other economic indicators. So you can go back and watch that, but this is going to be a lot quicker than last week. It's just going to be a little bit of overview of what's happened in the last 7 to 14 days. So what we're starting to see is showings are starting to slow down. And I can pull that up real quick. Let me share that with everybody. So this is the showings from the first 2 weeks of March. Actually, almost the first 3 weeks of March. And then I went back and did just what's happened in the last week. So under 400,000, you can see there's still been a large amount of showings. It's been 1,400 for the last week of, actually from the 20th to the 27th for homes between 100 and 200,000. This last graph actually shows for basically 3 weeks. So if we were to take 6,000 and divide that by 3, that's 2,000. So we were tracking at about 2,000 showings a week for all these areas here, which is pretty much just all the western suburbs, on a weekly basis for the first 3 weeks of March. Last week, we were at about 1,400. So we're down probably about 600 showings. So it's about 30% or so down. Same thing with homes between 200 and 300. For the first 3 weeks, we were tracking at about 2,500. So it's about 800 a week. And now we're at about 700. Actually, that has not seen as much of a slowdown. So the thing to really notice here is that we are starting to see obviously a slowdown in number of homes being shown in our local market, which is not obviously a surprise. You know, in Ohio anyway, real estate has been considered deemed essential, and in our governor's wisdom, which is true, I think real estate is essential. If we've got so many people that were in the middle of a sale, meaning their house is listed and it's under contract, and they now need to move out. And we've got a lot of folks that have sold their houses, again, they need to go find something to buy. So instead of just shutting that all down during this COVID-19 pandemic, they decided to let us continue to help service those clients with those needs. Now, what we have seen is folks that were just thinking about buying or thinking about selling, those folks have started to slow down and put their plans on hold for now. And that's what you're seeing with the number of showings. Next week, I'm actually going to have some great data that will show week over week over week of how many new listings are coming on the market and how that's affecting our local markets here. And I'll be able to start to see trends or show you guys trends as to week over week over week now that we're tracking this at a real micro level too. So I'm excited about that. But yeah, so we have seen it definitely started to see a little bit of slowdown in number of new listings coming on the market. What we haven't seen though is a slowdown in homes under 400 that are all updated, that show fantastic, that are priced right. Those are still selling very quickly. As a quick example, we had one listed on Wednesday, went live Wednesday afternoon. We had 10 to 12 showings on Thursday, and by Thursday evening and Friday morning, we've had multiple offers on the property. So the buyers are still out there. There's still a lot of buyers out there actually. And there's still sellers willing to sell it. Now, of course, because of the pandemic, we've taken a ton of extra new precautions. We're abiding by all the CDC regulations. We've even now limited the number of people in each house during a showing. We've got booties available when we can find it. Obviously, everybody's got their hand sanitizers. We've even started to provide some gloves at some houses that we were able to find some gloves. Obviously, when it comes to the masks, you know, the hospitals need the masks more than we need the masks, but we're providing everything we can to make sure that this, as we continue to work, we're working very smart, and the health and safety of everybody comes way before trying to get a house sold. So the big message, though, is if you are considering selling and you're in a position that you have to sell, I was meeting with some folks earlier this morning. They've signed a contract a couple weeks ago with a builder to build a house, and those wheels are turning with the builder, and now they need to get their house ready to get on the market. So that's another thing we're doing for folks, is meeting with them now while they do have time off or they're working from home to help get their houses prepped. So as time kind of goes on here, they'll be able to get their houses on the market and use these next few weeks as time to paint and do all the rest of the things that they might need to do to get the house ready to go. What do I kind of see happening as time goes on? I do see folks that don't need to sell holding off a little bit. And I continue to get the feeling, and by talking with more and more realtors, there are plenty of homes that are still selling. Matter of fact, there's more and more stories out there of homes selling without the buyers even physically seeing them. With what we can do now with virtual tours and video web conferencing, buyers are now a lot more apt to write an offer, get it accepted, subject to them doing an actual physical inspection of viewing the home at a later date. So, you know, I know 10, 15 years ago, that would be unheard of. In today's market, Even before this pandemic, we've had buyers do that from out of state. I think it's getting a little more unique now. We're going to be having and seeing more buyers doing that here on a local basis too. So I continue to see people are going to be sitting on the sidelines, and then for the people that are willing to be creative, the folks that have got to get their houses sold, I can see more and more of them being able to accept with the new guidelines that we have as far as showings go, and adopting some of these new technologies as we move forward. So that's really all I have as far as this week's content. If anybody has any questions, I'm going to open up the questions portion of this. So right now there's no questions typed in. If you want, you can also raise your hand and I can allow you to talk. If you just go over to the side there on the Zoom meeting, and I'll see anybody that happens to be raising their hands. If anybody will happen to have any specific questions, I'd be more than happy to answer that as well. Just wait for a few seconds here. See if anybody's saying anything on Facebook. No questions there yet. Nancy Douglas. Hello, Nancy.
Hi.
How are you?
Good. Great presentation.
Thank you.
I just have a question. How does home warranty play into your closing at this point, your listings and also pendings?
As far as adding a home warranty, or if it's already under contract or with a warranty, I guess maybe explain a little more.
I guess the importance of having the warranty right now.
Oh, great question. So as far as I know, the warranties will have nothing to do with the COVID, pandemic piece of this, or any coverage when it comes to that. I do like home warranties, especially on a house that has, let's say, older appliances, older furnace, older hot water tank. For those of you that don't know, home warranties cover they can cover the seller while the seller has the house for sale. There's an option for the seller to elect for that. And they'll also cover a buyer once the house is transferred to the buyer's name. The buyer is then covered usually for a year. Some policies are for 2 years. And they generally cover the main components of the house, mechanical components, the furnace, hot water tank, those kind of things, appliances. You tend to see more buyers in the lower price ranges under, say, 200 that really appreciate the home warranties when they see it being offered. In the higher price ranges, if you get $400,000 or $500,000, $600,000, you don't see the buyers appreciate it as much. But I think in the lower price ranges for sure, and then especially if the house has let's say dated, a really old furnace or a really old hot water tank, providing that warranty can give the buyer some peace of mind.
That's good. Do you feel that having a warranty could protect, if it's got seller coverage, could protect the seller kind of in that bit of a gap that might be that period of time that is a little longer than it might have been to get to closing, so that say something happens to a hot water tank or one of their appliances or something, that that they would be able to place a claim and get something covered?
That's a great question. So most warranty companies have two ways to select coverage. You can, as a seller, when you list your house, you can check the box that, yes, I also want coverage. What's from the time the house gets listed all the way until the time the house transfers to the new buyer. And then once it transfers to the new buyer portion of that warranty kicks in. So that's what Nancy's asking about, is if somebody were to select, yes, I want that coverage to start immediately when I list my house, you will start to see, that's a good, interesting point to start talking about, is homes that are gorgeous are still selling in days. I mean, it's really still that fast. In this week still proves that. Homes that maybe, and it's a whole other topic of reason why that's happening, but our average house, let's call it, that's taking 60, 80, 90 days to sell. And then now it might take a little extra time because of what's going on now here with delayed closings, or we have started to run into some challenges with mortgages where a buyer was qualified and now they might not be qualified anymore, which now we thought we had a house sold, now it's not sold, now it needs to come back on the market. And Nancy's point is now all of a sudden this house is up for sale for, instead of being for sale for a couple months, now it's for sale for 4 or 5 months. It does protect that seller for that whole period. So it can provide a nice security blanket. And now because of it taking longer to sell, might make more sense for a seller to opt for the seller coverage as well as the buyer coverage.
Yeah, and do you think that part of the COVID-19 thing, I'm hearing rumors of safety issues as we go down the road and people feeling scared about looting and crazy things like that. And I know one of the things with the warranty company I'm familiar with, they have a rekey where they have $100 rebate for buyers to put towards having those locks changed out or buying new hardware.
Wow.
Do you think that would be a great benefit to a buyer right now?
Yeah, I mean, I think, and that's a great question. And there's, I don't know, there's 4 or 5 large warranty companies that I'm familiar with. There's probably way more than that. And each one of them has little nuances in their policy. So it would definitely behoove you or everybody to read into those policies, because some warranty companies' coverage for the seller coverage is not as comprehensive as it is for the buyer coverage, unless you check certain boxes and pay a little bit extra. So no, I've not heard about them willing to help pay for changing locks. That's something we always tell our buyers as soon as we give them the keys is, within a couple of days, make sure you rekey every one of these locks, because you have no idea who could end up a neighbor might still have a key or a handyman. You never know. But
Oh yeah, if they've had work done, I mean, yeah,
yep,
it's a great feature.
yep,
This is a national company that has this available, and you think about a
it's a good
warranty
idea.
costing $500, and instantly you get $100
Yeah,
back towards that
free
safety
key.
item. I think that's a huge
Yeah,
deal.
yeah, for sure. Great question. Any other questions along those lines? Okay, well, thanks for sharing, Nancy. I'm going to put you on mute for a second, and then John, you had a question?
Yeah, I do. What are you seeing in terms of the loan origination side of things? What are you finding from them, and what are you seeing in terms of rates with the interest? And it seems like it's having the reverse effect, or lowering interest rates, but it's not affecting the actual selling interest rates. What are you seeing there?
Yeah, great question. So let's talk about rates. So interest rates. So mortgage interest rates are not tied to the prime interest rate. So there's a correlation, but they're not directly tied. So everybody, when they see that the Federal Reserve has reduced the prime rate, everybody gets excited because they think, mortgage rates are going down. That's not true. So mortgage rates are actually tied to the bond market. And last week, when the stock market, for those of you that were paying attention, who saw the stock market go up historically and down historically a couple times. And we've even seen that a little bit this week. And when we see a lot of people pull out of the stock market, a lot of them put their money in the bond market. And last week, there's some crazy things that happened in the bond market, so much so that interest rates in one day rose about 1% and then came right back down. So it was very volatile, the most volatility that I've ever seen as a realtor. So at one point, say the beginning of March, what has happened is interest rates kept going down lower and lower and lower. You could get a 30-year fix for about 3% with no points, or maybe 3.25, somewhere in there. What we also saw at that point was a lot of homeowners taking advantage of that and refinancing. So before the pandemic hit, when rates kind of dipped down a little bit more, a lot of homeowners ran to the banks to get refinanced. We also saw a lot of, our activity this spring has been phenomenal. So a lot of buyers have also been running to the bank to get money. what we are now seeing is, because of the lenders, a lot of lenders are backed up because of all these refinances, and because they're all backed up because now of all these buyers, and now they're all of a sudden trying to deal with these fluctuations in rates. We have seen a lot of changes and things slow down. So we're coaching our team members to add extra days. So if you were to sell a house today, normally a lender could transfer that in, say, 30 days. We're telling everybody to add at least 10, 15 days and try to go for like a 15-day closing. The other thing that's happened that is reminding me a little bit of 2008 is the lenders, most of them sell their mortgages on the secondary market, which means they don't actually, they might service the mortgage, but that actual mortgage is sold to somebody else. The guidelines that where the lenders are selling these mortgages on the secondary markets are changing now also daily. So we have had, within the last 7 days, 2 buyers now not qualify because the programs that the lender had picked for them that would eventually be sold to the secondary market is not available anymore. So yeah, we are definitely seeing some volatility in that too. And when anything gets shaken up like this, you know, everything kind of contracts a little bit and everybody gets a little bit nervous. So you're starting to see some of those a little bit, let's call them a little more creative programs that lenders might have had access to are kind of drying up. So does that answer your question?
It does, but also I'm wondering, you know, individually, you know, with loan in your, you know, that was good information, by the way, appreciate that. But individually, are you seeing anything with, and I'm sure you deal with a couple different, you know, LOs, anything in terms of tactics, how they're doing things, anything that you're seeing, you know, wacky, you know, are anything? Because sometimes, you know, what I always wonder is, you know, they come up with crazy stuff in crazy times, and I'm wondering if they're coming up with any of this crazy stuff in crazy times, or you know, or if they're treating it business as usual and they're just trying to be, you know, they're trying to be a little more conservative. I'm just trying to get a feel there what you're seeing. You deal with a lot more, you know, with those folks, I'm sure.
Yeah. So we have, you know, let's say 3 or 4 lenders that we have great relationships with that we talk to all the time. I have not seen anything out of the ordinary. You know, I know before the crash in 08, lenders were getting very too creative. Obviously, that's what kind of got us in that problem, or part of the reason that we got into that problem. So I guess it's a good question. I've not seen anybody get, I guess, too creative when it comes to as far as qualifying goes.
Gotcha.
Yep.
Okay. Thank you.
No, my pleasure. Any other questions like that? Or?
Nope, I'm good.
Okay. Thanks, John. Does anybody else have any other questions? I don't see any more hands. Well, thanks, everybody. I'm going to do this again next week. And next week, I'm going to actually have a lot more data. I still only want to take about 10 or 15 minutes at max. Some data that will show exactly what's happening to our market kind of on a week-over-week basis, so we can actually start to really track this. So if you have any questions along the way, always feel free to reach out to myself or anybody on our team. And again, if you are thinking about selling, it still can be a good time. We just need to make sure we take care of all the CDC guidelines as far as everybody's health and safety definitely always comes first in this. Everybody be well and stay safe.